I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, thanks for having me. It's a very interesting day as we're speaking. Of course, last night, Donald Trump gave his State of the Union, address, not officially a State of the Union address because it's his first year as president. And, over the past couple of weeks since he's in office, he's kind of polarized the country, and he's actually polarized the world. I've talked to people overseas that tell me, his statements when they're played overseas, they're kind of creeping people out. When he attacked the media, and he said things about Europe that we don't really see that much here. But when he gave his State of the Union speech, he did a good job and came off as very presidential. So it's real reassuring to people. And the market is gapped up this morning and is taken off. So that's kind of what's dominating people's minds today is Donald Trump's performance and then the gap up. But the action in the Dow, which is making a new record as we're speaking, and is above 21,000, it has to be put in context with what we've seen over the past couple months. We saw the Dow go up after his election and begin a tremendous rally that took a pause in January, and then we broke through 20,000. And we've been going up really since then with very little volatility. We haven't had a down day in the S&P 500 of more than 1% since the fall. In fact, it's a record length of time. And the volume in the market's actually faded away. It might be finally ticking back up today. But that's been the dominating factor is no volatility. And it's really continuing in this move. Although today the volatility is expanding to the upside, and there's two ways to measure volatility, and the one most commonly used or mentioned is the VIX, which actually is implied volatility, and that's a measurement in the options market of what options players are fearing could be potential downside risk in the market. And that, of course, is at a low level since the market's gone up so much. And it's going to remain that way until we have the market decline. So that's measuring what people think of volatility. But the real volatility is determined by the price action. And that's what I use to measure that myself, are the Bollinger Bands. When they come close together, it means that day by day, the intraday moves are small, and those indicators, the Bollinger Band indicators, and the width between the two bands went to levels super low last August that you have to go back to 1993 to find, and then going into today, they did the same thing again. They even surpassed the lows where they were in August, not just on the daily chart, but on the hourly chart. So you saw it. The Dow was up like several days in a row, but only up a couple points. The swings during the day are very tiny. So if you're a trader in the market, if the Dow fell 30 points, that felt like, oh my gosh, something big's happening. So all of a sudden, the moves in the market kind of shrank to nothing, and then today we're up, as we're speaking, over 300 points. So all of this little thin volatility has now expanded to the upside, and we're going up. Usually the volatility, when people talk about the VIX, it means you're going to get a move down, but we're going up, which this is actually kind of a rare thing to see this in a financial market, especially after you've been going up for over a year in a rally. And typically it leads to some sort of parabolic move that excites everyone, makes everyone want to buy and grabs everyone's attention. It feels like it's never going to end, and you can't see the end of it, but eventually it does, and that's how markets can top out. When you get some crazy parabolic final blast-off rally, such moves can last weeks or months. And I know a lot of your listeners are familiar with gold and silver and trading them. And if you think back to 2011, we saw silver prices double in the spring of that year to make a major top, and it was an incredible rally. So I think that's kind of what we're starting to witness in the stock market. I actually think the rally of that type began in early February when the Dow went above 20,000, and that was a major breakout. And I think this is just a continuation of it, where it's accelerating and picking up steam.
We'll have more with Mike Swanson right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Mike Swanson. Mike, when the Dow Industrial Index and the S&P hit record highs continuously, is that actually a warning sign for investors?
Well, not yet. However, it's getting to a point where the prices are very stretched. To give you an example, one indicator that's commonly used are moving averages to analyze the stock market. That's just an average of the price of a period of time, and the 200-day moving average has the Dow is now 12.4% away from its 200-day moving average, and the Nasdaq 100 is 12.7%. Often these things will be like 3 or 4% away from the 200-day moving average, and the Nasdaq 100 is farther away from its 200-day moving average than it was at the bull market top of March 2000 and in 2007. I can't even find a time when it was this far away from the 200-day moving average, and I haven't been able to look today. I just looked at it, noticed the same thing's happening with the Dow today. It wasn't like that a couple of days ago. So I have to go back and see if this has ever happened with the Dow, where we've gone up this much without any significant pullback. Is that a warning sign? I think it's a sign that it's risky to buy, unless you've got a plan to get out with stop-loss orders or buying put options. If you don't own stuff already, it is difficult to just jump in now and really expect to make a lot of money, and frankly, I think most people should use this and raise some cash and be cautious and look for a dip to buy later, or analyze how things play out over the next couple months, because the true warning sign in the stock market is if you get a rally or just a sideways market and you have the internals of the market decline, that means more stocks start to go down than go up, even though the averages seem to be okay, or they're going up anyway. If that starts to happen this summer, or at any moment over a period of weeks, that would be a sign that we're headed for a significant drop. And at this point, it could be very dangerous since we've gone up like this. So I'm in a situation personally myself where I feel like the market is doing things that there's not much historical comparison to. And I have to evaluate it almost on a daily basis now to see if we're near top or if the risks are really out of control. I mean, one thing that can happen if the Dow were to go up one day 200 points and finish in the red, that would look like a major top, or at least a reversal of the momentum, so you get a correction. So at this point, we just have to be careful and almost look at this day by day. And if you're going to buy it, you got to have a plan, and not just say, "Oh, it's up. I feel I got to be a part of this." And everyone's bullish now. I mean, even the President of the United States last night mentioned the stock market going up in his speech. That's something also that I don't think any president has ever done before that I can remember. So, you know, the President of the United States is talking about the stock market. It makes people want to buy it.
We'll have more with Mike Swanson right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Mike Swanson. Mike, the automotive sector for the last 3 or 4 years has done very well, but will it continue to be a shining light in the near future?
Well, I don't have any reason to think, you know, it's not going to keep growing and doing okay. We don't have any signs that we're about to hit a recession or a major slowdown in the economy. And usually you see the stock market top out first and decline, and interest rates or the bond market makes some moves where bonds rally to factor in future rate decreases and so forth before the economy slows down. The markets tend to begin to factor that in, and there's no sign of that happening. In fact, I would say the biggest risk to the auto business, the economy, and the stock market is rising interest rates. We are set now to have, as of this morning, an 80% chance of a Fed rate hike in March. Before this week, it was more like 60%. So the odds are increasing of a hike in March. That a hike in March doesn't necessarily mean the end of the world, but we have a situation where the stock market is reaching, or has reached, wild valuations. The cyclically adjusted P ratio is right below 30. It could even be above 30 by the time the day closes. And the only time it has been above 30 was in 1929 and 2000. And of course, when the markets those years topped out, the economy went down the tank, and the stock market went down the tank first. So that's a giant risk. Now, when rates go up, eventually they can go up enough that the bubble pops. In fact, that's typically what causes the bubbles to blow up and begin to unwind. So that's kind of where we are. We got rates going up in the stock market and the bubble. At some point, the rates will go up enough, I think, that it's just going to be over with. I don't think that's going to necessarily be in March, and there's no way to predict it. Does it take 2 more rate hikes to do it, or what? Historically, it's typically 3 rate hikes, and then they say the stock market tumbles. That's almost been always the case, except for the 2003 to 2007 bull market. They raised rates multiple times, many more than 3. I think it was like 10 before the market declined. So, there's no hard and fixed rule. And one problem with analyzing the markets in general, where you look at, this is like 1929 or 1987 or whatever, is if you're only looking at 4 or 5 past examples of something, it's not really statistically valid. So that's why in the end, the best indicators I think to use are the internals in the market to pick out future trouble, because that's not something that just happened once or twice, but dozens of times, and so forth.
Is there any concern with Trump's wavering policies on so many things that international trade with the U.S. is now becoming something seen as risky?
Well, honestly, I think it's tough to tell what's going on in Washington, D.C. with Donald Trump and how much Donald Trump is even in control. If you follow the press reports, and he says don't read the news, don't read newspapers, don't watch TV, only listen to what he says. But if you disobey him and do look at other sources, what you'll find is his White House is really split in 2 factions. One was Steve Bannon, his chief political advisor, and a couple people around him, and then really the vice president and the Secretary of Defense and Secretary of State, and this previous fellow who's his chief of staff. And what you'll see if you follow just the news stories, they don't even have to be just the headlines. You'll see Trump make statements, say about NATO that we don't need it, or we need to, change it or something. And then you'll see one of these other figures in the administration fly over to Europe and repudiate it. So it's like who's really, and then he says one thing. If you listen to him very carefully, he'll often contradict himself. For example, on Monday he did an interview on Fox News, and someone asked him if the people leaking to newspapers in his administration aren't being coordinated by Obama, like somehow President Obama is a mastermind. And there's a conversation about this, and the interviewer said, well, it wouldn't that be unlikely because past presidents haven't done that. And Trump said, yes, you're right. Basically, there's no evidence. And then the next sentence, he said, but it could be Obama. And I'm just saying he contradicts himself. So it's hard to tell really what's going on if you only listen to what he says and how much of it is going to happen and how much of it isn't. Actually, the best example of this is the State of the Union address itself, because he says he's going to do all these things, and there's absolutely no evidence that they have any real budget that's been made. It's just a lot of talk. The infrastructure program that he campaigned about, he said it'd be $1 trillion, but there's no evidence that they have any concrete plan. They haven't presented one to the House Republicans. And then it becomes a question, it could be very possible that the House Republicans actually create the budget and Trump just signs it and proclaims that he's done it. So it's hard to tell what he's really doing, if anything, besides just making all kinds of statements.
Well, at least it looks like they'll have a budget. Look at how many years it took Obama to get his first budget.
Yeah, I think you would hope they will. I think they will, but I think it's going to be because of the work of the House Republicans and at this point, and not Trump. At least it's the way it's going so far.
Mike, thank you so much for chatting with us.
Thank you. It's good to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.